The Morgan Report with David Morgan.
David Morgan with you with Money and Metals for the week of the 19th of June, Father's Day. And as an aside, Father's Day was actually started in Spokane, Washington. Very volatile markets across the board. What we're seeing, first of all, in the gold market is gold is testing the $1,300 level. Many have stated it's going to $1,450. I'm sure it's going well beyond $1,450. I'm just not certain of the exact time. Silver is a non-confirmation of the breakout of gold, which is what happened last time. So I'd like to see silver above the $18 level, but I don't want to spend too much time on the focus of where we're going short-term in the gold and silver markets. Longer term, we're going far, far higher. I think that is a key element to bear in mind. On the economic news front, there are so many issues. I just basically want to hit some of the headlines and inform everyone that it's really time to probably step up your cautiousness toward the overall financial system. I am not a big fan of what's called doom porn. I don't like the term, but it suits the situation. However, things are accelerating. I just finished listening to the Greg Hunter interview with Jim Sinclair and Bill Holter. And this was very, very interesting. A couple of quotes from them. I don't want to steal anybody's thunder. Mr. Sinclair made the comment that this financial situation that we are in dwarfs the tulip bulb mania and dwarfs the South Sea Island bubble. And of course I concur with that, and I've been saying for years that the biggest bubble of all is the debt bubble or the bond market or bond markets. In fact, I was actually taken off an interview on CNBC several years ago because they were trying to get me to say that gold was in a bubble when it had gone slightly past $1,000 per ounce. And I was emphatic that that was not even close to a bubble, and that the bond market was the biggest bubble. And as I started to get those words out, there were technical difficulties and I was cut off. I don't think I'll be asked on CNBC anytime in the near future. But moving on, I want to give you some headlines because I want you to really start thinking and digging in. If you're just watching this for infotainment, or it's something that you think is kind of cool, or it's nice to be informed, please dig a little deeper. Please get real. Buy real and be real. We are entering times, and it may manifest, I wish to say, it may manifest before the end of this year. And what's going on in the bond market, looking specifically at Deutsche Bank, is they have a chart pattern that's very similar to Lehman Brothers. They have way too much derivatives exposure. As Jim Sinclair said, they're basically out of the club, which means that it looks like their failure is going to be, I won't say imminent, but probably fairly soon. So some other information, just headlines that are key to your thinking process and where we are in this global financial morass. Number one, stock markets crash of 2016. Stocks have already crashed in 6 of the world's largest 8 economies. So that's something to bear in mind. Global negative bond yield. Swiss 30-year bond yield dips into sub-zero territory. And again, coming back to the Greg Hunter interview, as it was pointed out, when you now invest in a bond at negative interest rate, what you're really saying is that it's safer to buy debt than it is to hold cash, which is absolutely 100% completely absurd. The safest thing next to gold is cash. So you really look at the situation to buy a bond with a negative yield, thinking that that is something that is worthwhile, is absolute, total, complete insanity. And yet, that is where the financial markets are in several instances. On the Canadian housing market, it is a big bubble, a very big bubble, and is going to end in tears. Sorry to my friends in Canada. I know many of you, but especially the Vancouver area. And there are bubbles. And one of them, of course, is the huge bond bubble, as I said, and this other one is Canadian real estate market. U.S. officials fear a Saudi collapse if the new prince fails. Quite a headline. I think you should investigate that. So there's been another mega hack, this one affecting 45 million accounts from 1,000 websites. And Japan, with my friend Tres Kipna, talking about short Japanese debt. a headline here that Japan, a future of stagnation. Well, I think it's going to be a lot worse than stagnation. Japan doubles down on coal power as trading houses curb investment. China's debt is 250% of GDP. And here in the US of A, New York State Senator introduces unconstitutional anti-free speech legislation. And I think I'll wrap up with this because I want to emphasize the debt markets and the bonds. But charting the lowest interest rates in 5,000 years and the worst commodity returns in 80 years. Another headline not from the mainstream press. So that's going to wrap it up. I do want to encourage everybody to go to the Morgan Report website. I'll be doing a webinar in about a week on a Saturday on a weekend so more people can attend. And I'll be talking about where the precious metals are going. As many of you know, I have stated for a long time that the biggest move comes in the last 10% of the time. I'm going to go back in history and prove to you that's what took place last time, which means there is no guarantee it will take place this time. But as Jim Sinclair said, again, what's taking place or will take place when the reset finally gets here, and it may not be that far off now, it will be into the financial record books. I've said that myself many, many times. And Jim went on to say that it will be to our children's children's children that will be talking about it. It is that big an event. I don't really want to sell fear. There are ways to protect yourself. Gold and silver are obviously a couple. But more important, I think, than just having your financial house in order is having your own personal house in order, which means it's about your attitude. Your attitude that no matter what the world throws at me, I'm willing to face it squarely, accurately, and move through it. Because these are going to be trying times, not only from the aspect of the financial markets, which is just part of our lives. It will be trying times for many aspects of our lives. So again, get the right attitude, and I'll be with you in the not too distant future.